What's up, traders? Welcome out to another edition of Trade Masters. It is Wednesday, November 10th. This is Coach Tyler here to defend my title. Got Coach Emily coming into the ring, bringing her best. Emily, how are you today?
I am doing wonderful. How about you?
I'm doing well. I'm always excited to go round and round with you, and I had some fun ripping through charts today, looking for trade setups. You know this as well as me. It's always good when you have to be on a webinar like this, and you got to look through your entire watch list, see what kind of trades there are out there, and you know it makes me money. I know it makes you money. So it's been a good exercise. What do you like about the markets this week?
Well, I kind of like the fact that things are kind of slowing down. I don't like that they're happening tonight on a webinar where we're trying to find some clicks. So everything is kind of like setting up, but it's not quite ready to cook yet. But I definitely like what the market is doing in terms of just having a nice little pullback, giving some time for those stocks to settle. Perhaps we may have missed a few on the run up. When you get this kind of day in the market, it's a good time to go looking around and finding those setups that are maybe not ready for tomorrow or the next day, but could be possible setups for Monday or Tuesday of next week. So we got a lot of those. Hopefully the market does hold. I mean, we're sitting on that 9-day moving average pretty well. So hopefully we hold that this week.
Yeah, definitely going to be interesting to see. For those of you that are not aware of our weekly Wednesday show, so Trade Masters is a competition where we have 3 rounds. We're going to go through a couple of stock pitches. We have a Delta round where Emily and I are going to pitch directional trades to you. And then we'll have a Theta round where we're going to pitch some cash flow oriented trades. And then the third round is the Wildcard round where we can pick whatever we want and pitch it to you. And then you, the viewer, get a vote who wins each round. Best out of 3, 2 out of 3 wins, and the loser goes home, tail between the legs. Winner gets to come back the following week. Last week, you guys made a fantastic choice, right? So I'm back again. We shall see if Emily Emily dethrones me. Listen, I like your chances, Emily, okay? I like your chances. It's going to be fun. So with that said, round 1, Delta round. I'm going to let Emily go first because I'm polite and she's a lady. Emily, the floor is yours. Tell me what you got.
Okay. All right. So we're going directional trade first.
Yes,
is that right?
ma'am.
So, you guys know this, everybody kind of knows this, we all have our own little processes that we go through on a daily, weekly basis. And my process never changes. I literally check the markets first and then go through my, my sector ETFs and try to find, areas that I need exposure to. And areas that are doing well that I could, either add on or perhaps, find something that maybe wasn't in my radar. So I have not played basic materials in a while. And my go-to, my favorite basic material stock is FCX, and we can all talk about FCX all day long, but that's not the play that I'm looking at today. So I had to go look for something else. So if we look at XLB and look at the ETF first, it's been just on a world of its own, right? Just out there in la la land, right? High basing, if we break out, at that 89.65 zone, we could, continue, on the uptrend. So I'm looking at something that is kind of similar to that, or maybe perhaps high basing at a lower range, but trying to get back to all-time highs. So if you could give me DD. So DD kind of similar to XLB, except it's not at the all-time highs. However, here we are high basing on, that is what, 1, 2, 3, 4, 5 days of just high basing. And I like it because today, as the market started to kind of sell off a little bit towards the end of the day there, it kind of held its own, right? didn't get beat up as much as everything else did. So I'm looking at this going, all right, if we get a few more, you know, high bases, maybe one or two more, and then maybe break out into next week, that would be a great setup. And this is going to be an easy play for me. I'm looking at that breakout zone right there at price is at 80. So if, you know, we look at 80 and then we look at the previous resistance level there at 85, 87, right? So if I go to my options chain, and volatility on this is not that expensive. We're going to go to the January. So I'm going to give myself some time. And this is going to be just a, you know, just a simple, the bull call spread. We're going to buy the 80 where I think it's going to break out. So we're going to buy the 80 and I'm going to sell where I think it's going to hit resistance, which is at 87.5. So the cost is within my risk tolerance. So I don't even need to worry about having a stop loss. I'm willing to give up 261. That's, you know, that's where my risk tolerance is. So for me, I don't even mind putting on a stop loss on this one. And if we get anywhere above, if we get to 85 to 85 and a half, 87 and a half, nice little pocket change for Christmas shopping. If we get there. So that's my quick delta play on DD. We would have to wait for confirmation break above 80 and targeting right at that resistance level, 85 zone to 87.5.
Well played, Emily. You know, right when you pull up DuPont, right when I pulled up DuPont, I'm like, why didn't I see this chart? Because I swear I went through all my stocks, and this is definitely one that would have made my short list for sure. I like the pop on earnings too. You got your fundamental catalyst here, and it's holding tight, right? Hasn't given back an inch, which means it probably wants more. I like this trade. Well done.
Well, let's see if Team Tackle over there on YouTube is liking the trade. But I guess you have to go first so that we can compare.
We do.
So, what do you got for me, Tyler?
All right. I don't usually do this, but I looked at this chart and it kind of grabbed me and said, hey, you're a bozo if you don't bring me up in this Trade Masters. Okay. Like, I am so attractive that you and anybody who has two eyeballs really needs to pay attention to what's going on here. And this is a bear pick, right? I kind of feel yucky bringing it up. But you're going to look at this chart and you're like, yes, of course, I wouldn't touch that with a 10-foot pole. I'm talking, of course, about Zillow.
Oh, Lord.
Talking about Zillow. Okay. If you guys haven't heard, Zillow is having some troubles lately. And they tried home flipping. Turns out it's not as easy as it looks. And they essentially threw the kitchen sink into their earnings report. Stock got destroyed. And you'd think, well, it's down a lot. Are you sure it can go lower? Yeah, I'm sure. Take a look at the long-term chart. Let's take a look at the weekly here. So, dude, not a good look. This thing went from 20 bucks to 210, back to 64, and it's at an interesting spot long-term. So if I draw a line here, I have, I don't know, what are we calling this? 67 bucks was pretty significant resistance. Once you broke it on the weekly, it went to the moon. We've since come back full circle. You're now below that level. You're below the 200 weekly. I mean, I don't know, where's the next support level? Like maybe 55? Like that's probably the next weekly zone that makes the most sense. So you go to the daily and it's like, look, there's been zero desire to buy this after that earnings announcement. At best, it's gone sideways and drifted. And with today's 3.2% drop, it is now testing the bottom of its earnings candle. So you have a nice little low base here, and I think it's going to go lower. Sometimes, indeed, most of the time when you have these earnings debacles, it kind of hangs over the stock. If they hated it so much on earnings, what the heck is going to change about the fundamentals in the next week or two that would all of a sudden cause them to love it? Probably not much. And so I think this thing's probably dead money at best for the next quarter. But there is a chance that if it slips below this support, I think you can get further continuation lower. This kind of reminds me of Twitter, right? Similar thing, dropped on earnings, sideways, breaking lower. Snap also, no bid after a bad earnings announcement. So, I just feel like if it's not going to go down, it'll go sideways, and it's just not going to go up. So in the event it gets a little slippery, I want to have some exposure to the downside with a directional trade to take full advantage of it. I don't want to sell calls and just get paid some nickels. I want to go for the gusto here, Emily. So I'm going to buy a put spread. I could just buy a straight up put, but the options on Zillow are still kind of juicy, so kind of expensive. So it actually works quite well if you sell a lower strike put against it. So we're going to buy essentially the at the money put, technically slightly in the money, the 65 strike. I think this thing has room to 55. So we're going to do a 10-point spread here. And I'm just going to do it to December. I don't think I need to buy a ton of time. It either is going to work or it's not. And if it doesn't, I want the cost to be low enough where I don't necessarily need a stop loss. So the December 65 put is $4.65. The one that I'm going to sell against it, I'm bringing in about $1.10, $1.15. It's going to cut my cost by, 25%. I feel like it's worth limiting my profit potential to reduce my cost by 25%. So that'll cut the cost to $3.40 for a $10 spread. It's great, right? Normally we don't want to pay more than $4 or 40% of the spread width. It essentially means I can make over 150% return. The other thing I like is the net delta. I'm buying about a 50 delta put, selling a 17 delta put. 50 minus 17 is 33. So I have a really beefy negative delta at 33. So this thing's going to move. I'm going to rack up profits quickly, which is why we like delta trades. They're more aggressive. And that's it. Paying 340 if we make the math easy, paying 340 to make 660. If you want to stop loss, $70. If this thing gets above 70, that's the high of the base. I'd be a little bit, I'd be like, what's going on, Zillow? Like you're misbehaving. That would be enough adverse movement where I'd maybe rethink. So 70 for a stop if you want to use a stop, and 55 for the target. That is my delta trade.
Not bad for a bearish trade on Zillow.
Look, I hate bears, but you know what? If you're going to go bearish, Emily, you could do worse than Zillow.
Oh man, it's been hard to trade bears. You feel like you want to pull the trigger. You get there, you almost want to, and then you're like, but yeah, this would be one that I would definitely get to the point where I'm at least going to put an alert if it breaks 63.13, and look at it and go, okay, what do I want to do? So yeah, I like this, and it's quick and easy, cheap. 340 all in?
Yeah, 340.
Yeah, not bad.
No, it's not. Look, and I think a good exercise is to put it on trial, right? Argue both sides. So it's like, give me the bullish case for this, right? Maybe I can talk myself out of it. And I don't feel like I would touch this thing. Like, it's gross. But the bullish argument is that it's just way oversold. Maybe they priced it in. Zillow's a good brand. They have hundreds of millions of people that go to their website every month, but market hates it right now. So who am I to fight the market, Emily?
Well, it's funny that you said, give me a bullish argument. I was looking at Roku yesterday and kind of having that same thought process in my head where, it was sitting at that major support zone. And I'm like, okay, a buyer's going to come in and buy it up, at the support zone. And we were discussing this on Queen's Court yesterday with Matt, and we were like, yeah, but it's leaning more bearish than it is bullish. So might as well just go for the bearish side.
Yep.
So
totally agree. Okay. That's it for round one. You all have the ability to make either Emily or me very, very happy in the next 5 minutes. So feel free to vote there on YouTube. In the meantime, Emily,
I don't
go ahead, Emily.
look at the polls. I'm tempted to go on YouTube and look at them. I don't want to though. I'm so tempted.
Okay, well, we'll see. But let's go ahead and kick off round two while we're waiting here. The theta round, what you got?
All right, my theta round, we're gonna go healthcare. So give me the ETF on healthcare there in XLV. And, this is, again, just another area in the market that's just been, doing really great. It got beat up. And then once it started recovering, it's just been on a run. So here we are, we've had a couple of days of just, it's settling down, and now it, trying to make that next push up, right? So all-time highs there is 137. And again, my process is very, very simple. I go look for things that look similar to the actual ETF. I've had a favorite that has really been doing well in healthcare, and that's in Lilly, LLY. And I've done a few different strategies on Lilly, and I was really contemplating what to do with this one today. I was thinking, could this be my anything goes, or is this going to be my theta play? So I'm looking at this, and do you mind throwing Mark's girlfriend on there, please?
Listen, I never mind. In fact, I'm so on board with Mark's girlfriend that I put it on my little shortcut here, as you can see. Yes.
And you can see how Lilly has just been riding that 9, Mark's girlfriend, like really, really well. Had a couple of days of a pullback, what was that, Friday and Monday. Had a nice candle yesterday. We're getting a confirmation candle today. So I really like it for another push to that all-time high there at 275. So, I was thinking maybe this could even be a directional play, but, I'm just going to keep it simple and just go theta, because there are some nice juicy premiums on this, and we can go a little bit further at the money and give ourselves some cushion and still pick up something really nice. So if you take me to the trade tab, we're going to look at the December. And on Lilly, we're going to, and the playbook on a bull put spread is that you start with the 25 delta and you work your way down, right? So it doesn't have to be the 25 delta. I like to give myself a little bit of wiggle room if I can. So I played around with some numbers a little bit, and I'm liking the 240. So if we sell the 240, that's a 14 delta. And then we're gonna buy the 230. So we're gonna make it 10 wide. Pick up $1.13. So I'm looking at the probability going, all right, I've got an 86% chance that I'm just going to cash flow $113. If I throw that on the Analyze tab and put those slices on the chart, I like where it lands. It would have to literally break so many levels of support before it gets to where my strike price is. So I've got plenty of time to make a decision and get out of this trade if it's not going my way. So it'd have to break the 9, it'd have to break the 20, right? The 20 sitting at a significant whole number there at 250. Then we'd have to clear the 50, before we get to that. So there's plenty of opportunity for you to make a decision on, what to do with the trade once, if it goes in the opposite direction. But I like giving myself space and cushion. So if I don't have to manage it and think about it, that's enough distance for me. And where my break even is, if we look further back in that chart, around July there, that's another level of resistance there as well. So even if it were to break the 50, could it come and find support there, at that 240 zone? Who knows, maybe, possibly. But point is, I've got plenty of time and opportunity to make a decision. Should this break the 9? Should it break the 20 to make a run for it? And the ROI on this is 12.3%. on a 37-day contract. So that is right in line with, works for me. It's a green on all angles here. So that is my my theta play on Lilly.
I like this one. You've done it again. You've done it again, Emily. I do like this one. I like, you know what else I would pound the table on Eli Lilly is I would say, look at the strength today, right?
The volume, yeah.
Up 1% and the market got punched in the face. Great relative strength. Great relative strength. The volume patterns too the last month have been totally in favor of buyers. Yep. No distribution days really whatsoever. So yeah, I dig it. I dig it. All right. Well, do you want me to go straight to mine, or do you want to see what YouTube said?
Oh, let's see what YouTube said on round one. Let me see if I have a chance. I might have to think what my third strategy will be.
Oh, you have a chance. 52 to 47%.
Listen, I need to know what you pay your students to come here and vote for you, because I need to know what to do next round.
Listen, you just have to treat them very well, Emily. You treat them very well. You tell them you love them and they always make good choices and you're very proud of them. That's what you do. Just like your kids, Emily. You know how the game works.
I'm gonna have to try that. I thought I did that. The last time, but I'll keep working at it.
It's close. It's close. Listen, you log in 4 different times on YouTube and you spam vote yourself. That's how you do it, Emily. All right. My pick, Eli Lilly was great. I'm waffling on this because my wild card is also a cash flow pick, a theta pick. And I'm trying to figure out which one I want to do for round 2. So let's go with consumer staple. Okay. Similar vein as healthcare. Look, maybe after today, particularly the NASDAQ got hit the hardest. Maybe after the NASDAQ's whack today, you're like, I need some stability in my life. This high beta stuff was fun on the way up, but they totally pulled the rug out from under these high volatility stocks today. I'm not feeling very comfortable. Give me something boring. Like give me a telecom, give me a staple stock, give me a low octane cash flow play. Okay, I'll give that to you. I like what's going on in Procter and Gamble. I like what's going on in Procter and Gamble on multiple time frames. The first thing that jumps out to me is the same thing I said on Eli Lilly, which was the relative strength today.
Yeah.
Look, I mean, I think that if you look at your watch list and you sort by percent change and you see a sea of red, not as much green. I mean, that stuff on the green side jumps out to me a little bit, right? There's your Eli Lilly, right? Look, oh my gosh, look at this. Look at this, Em. Our picks are pals. They're almost adjacent to each other. Were it not for AbbVie.
Almost neighbors. We got one person in between us.
That's right. That's right. We're simpatico. It must mean something. So I like the relative strength today. If you look at the weekly chart, this is a really, really nice kind of cup and handle pattern. This is major weekly resistance. I mean, with so many stocks that have gone into the stratosphere, PG is the same price it was a year ago. Effectively, it's gone nowhere for the past year, albeit, I don't know why I said albeit. It's gone nowhere the last year while its earnings have increased. I think its valuations got sexier. I like a stock that's breaking out of a 1-year kind of cup and handle base pattern. So very strong long-term technicals. And in the short term, completely ignored the sell-off today. And you could argue maybe it was money rotating into more defensive areas like Eli Lilly, like Procter & Gamble. Yeah, perhaps if that continues, I think it helps. So that said, it's not like I'm going to buy calls on PG. I mean, it's not that type of stock. I want to do a cash flow play, and the volatility's dead. You can't sell puts because they don't pay you anything. And so you're really left with something like a bull call diagonal spread or a poor boys covered call. So what I'm going to do is I'm going to try to amp up the leverage a little bit to make this return sexier. And you can do that by shortening the time horizon. Like instead of buying a 6-month in the money call and paying a lot of money, I'm going to buy a 2-month in the money call. I'm going to sell a 1-month out of the money call against it. And this is actually going to be very simple. I'm buying the 145 call for January. Okay. I could have gone to 140, but it was a lot more expensive. So I'm like, screw that. Let me just go the cheap one at 145. And I'm going to sell the December 150 against it. essentially first strike out of the money, 1 month out. The covered call, that's the covered call I would sell. So same logic as a traditional covered call. And the numbers work pretty good. So if I go to Jan, I'm going to buy that 145 call. And on a side note, the delta is 56. I usually like to get a little higher delta, but I didn't want to pay $875 for the next one. So I'm like, I think I can make it work. So buy the 145 for Jan. Go find that first strike out of the money in December, 32 delta. That's perfect. $1.40. That's great. It's going to reduce my cost about 30%. $3.63. That's a great cost for $146 stock cash flow play here. And if I look at the risk graph, this is not the one I want. Thought I already had it in. Let's try that one more time. All right, so if I look at the risk graph, if we go up too much, this doesn't have as flat of a profit range as a traditional covered call, but I don't care because I don't think it's going to go that much past 150 anyways. Because if you look at the chart, like 150 is, it's not right at the money. It's got some distance, and even if it does go past that, I make $130. It's like a 30% return. If I'm lucky and it's sitting right at 150, I'm making like whatever 230 on 360 is, 60% maybe. So it's like, look, I know it's PG, but I just built the trade where you can make like a 30 to 60% return if the thing goes up 2 ATRs. And it's dirt cheap. If you're wrong, it's not like you're risking an arm and a leg. If you want to put a stop, I would give this some room because it's a position trade. Stop it at 139. You're risking $200. 5-year river. You're risking 200 to make 200 to 130. I don't know. I mean, the numbers work. The math works. Seems pretty good to me. And the chart looks good. And the vol characteristics are on par. So checks all the boxes. Just a matter of whether this fits your personality, personal preference. But this is my kind of cash flow trade. What do you say, Emily?
I like it. I like the poor boys covered call. Because PG is if you were to do a covered call, you're probably not going to pick up that same ROI, right? Because price of the stock is 140 something, right? And if you were to go out and sell that same,
you'll make a greater dollar amount, right? I mean,
you make a great dollar amount, but I don't know if that ROI would be about the same. And plus whatever you're holding up in buying power to do that, right? But I like it for a quick, don't have anything in this area of the market. It's Procter & Gamble. It doesn't have a lot of volatility. So, it's likely to just kind of, hang around where it's at. And if it does inch up, it will, it will get there gradually, which you want to happen and have it land right there at 150. So don't mind this at all. And, it's not that expensive. It's cost effective, $340. Not too shabby.
I found that the sweet spot for those diagonals is like $75 to maybe 150. You get up to like $200, $300, $400. It gets a little tough, but it fits. It fits.
Yeah.
All right, Emily, let's be judged. Okay, guys, do your worst. So Emily had Eli Lilly bull put spread. And I had the Procter & Gamble breakout poor boys covered call. A couple of cash flow plays there. Emily, are you pre-buying Christmas presents for your kids because of supply chain worries? That's my question.
I hear that could be a thing this year. I have not started yet, but maybe it's time to start looking at that wish list of theirs and see exactly what they're asking for and start to think about ordering that stuff. But mama needs some money. I need to cash flow a little bit more. So let's go around and then see whether or not they're going to be getting anything under that Christmas tree.
There you go. Okay. Round 3, let's do it. Wildcard round. Go ahead, what you got?
I don't want to say I'm scared, I'm not, but I have a feeling that, you're so popular on Trade Masters that you just have these guys just like, wrapped around your little finger, and they'll just vote for you. So I'm feeling like I have to go like, have to spice it up and give them a little something extra. So
hey, don't stop the reverse psychology stuff.
Listen.
Right? Guys, don't listen to her. You're not wrapped around my finger. You are independent beings making your own well thought out decisions. I don't know what she's talking about. Go. Sorry.
Go look at this and see what you said about me later on today. Don't worry about that. I'll go look. I'll go check it out. But here, so this is Eli Lilly. I love it so much. I was also contemplating a broken wing butterfly. So this is not my third round pick, but just to kind of show them real quick what they could also potentially do with Lilly if they didn't want to do a bull put spread. Is do a broken wing butterfly, and we would be looking at the same concept, right? So we're targeting that 275 zone right there as the all-time high. So those will be the shorts that I would sell. I would sell somewhere around the 275. Now on the trade tab, we don't have a 275, so I had to go 280. So if we stayed on the
December.
Yep. So we would buy the 260. We would sell the 280s, and then we would buy 290. So cost-wise, you're coming out of pocket 621, but if you were doing the bull put, that they're going to hold up $1,000 in buying power. So this ends up being a little bit less, out of pocket, even though it's a debit play you're paying to get into the trade. But if you look at that risk graph, it looks pretty darn good. And all Lilly has to do is just move gradually, in that 270 to 275 zone is where I want it. If it gets to 280, even better, but it hasn't gotten to 280 before it's gotten to 275. What I like about this trade is as time goes by. So if you give me the implied volatility, the little setting, on the little settings tool down there where we have the where we can change the implied volatility up right there. So we're not going to do anything with the implied volatility. Just give me the price at 270 and move the date to like 2 weeks from now and see how that profit changes as time goes on. So if we hold this for 2 weeks, we're looking at a potential profit of 150. We were getting a credit of 113 if we did the bull put spread, but if it gets to that 280 price or 275 price, now we're looking at it looking a little bit more sweeter. So that's just a bonus on Lilly. That was not my my bonus play. My bonus play is CNC. Still your company.
Wait, what happened here? Did you just sneak in 2 picks on Wildcard Round? Okay.
Of course, I'm allowed to do that. Similar to your analysis on PG, right? I love this even on a weekly. It looks so much prettier on a weekly. Breaking out of that all-time resistance level there at 75. And, basically what I was thinking is I could do the equity, and do a covered call on it, but I like, doing the calendars on this. So similar to just what you did with Procter and Gamble, what I'm looking at is buying the January, and we're going to buy the 60 delta. So we're going to buy that 72.5. So that's the one we're going to buy. And then we're going to go to the December monthly, and we are going to sell that 80 because it's at an all-time high. So I really don't know where it's going to go to, but from 75 to 80, that could happen, right? Kind of like what we were talking about with Procter and Gamble. So it's funny how we kind of like both are analyzing, 2 different companies, but kind of looking at them the same way. I think I was taught by you. You could have been my mentor. I don't know. But cost is going to be 478. I love it on the analyze tab. If it does get to that 80 level, that's where your sweet spot is right there. Pick up a nice, $1.64. If it, to expiration, the max you can make is 375. But if it blows beyond that, still can make, A little bit of change.
Plenty, yeah.
A little bit of change on that. So this is my bonus third round pick. Lily was just like, I could have also done that with Lily. So
Listen, a little bit of muscle flexing, it's fine. It's fine. CNC, what I don't track these guys as much. What sector is this?
So they're in healthcare.
Okay,
I didn't track them either. I was just kind of looking in the healthcare sector because that's, one of the areas that's just that didn't get beat up today with everything else, right? And it kind of came up on my radar. So I have never traded them before, but I looked at that chart and I'm like, it's pretty enough. Pretty enough.
You know what's better than a 1-year cup and handle is a 3-year cup and handle pattern, right?
Yeah.
Well done. Okay, good. I love it. Let's
give me your best third round.
Okay, so I am going to go with let me paint a picture. And close your eyes, listen to my voice. What sector has done very, very well over the last couple of weeks? I wrote about this in the Tackle Today email yesterday, I think, maybe the day before. Semiconductors. If you want to know why tech has done so well, not today, but previous to today, what has been one of the big growth engines of this rally in tech? The answer is semiconductors. NVIDIA has gone bananas. AMD has gone just crazy. I'm having to come up with new ways of saying it's gone bananas. It's gone out of orbit. It's in the stratosphere. It's gone parabolic. Like it's just gone up a lot, right? So I have been interested in the next pullback because this was the strongest rally we've seen in semiconductors in, I think, all year long, right? I think this was the strongest rally. And so what you have to ask yourself is, do you think that one CPI print, which arguably was the catalyst that maybe spooked traders today, if that's what you're going with, interest rates went up today, the dollar was strong in anticipation of higher rates, strong inflation. Like, do you think that really kills the bullish argument for semiconductors? When you weigh it in your mind, you have this gloriously bullish chart with increasing momentum and volume. Then you have a CPI print that causes a pullback. I don't know, like I'm going with the chart. Like I think that the dip gets bought. I wanted to buy this dip yesterday, the day before, the day before, the day before. Now that the dip is here, I'm not sure that anything about the backdrop and the environment has changed where all of a sudden I don't want to buy the dip. So I don't want to be one of those schmucks who says, give me a dip. I want to buy a dip. And then the dip comes and I'm like, I'm not touching that. Like the market looks like crap. And it's like, wait a second. You just said you wanted a dip. So you have your pick of the litter in semiconductors right now. And Emily and I were talking a little bit about this pre-show. Some of these, it would be lovely if we had one more down day. It would be more clean. And so you might need to wait a day on these. The one that I want to bring to your attention is Qualcomm. For a couple of reasons. Number one, it is a semiconductor. Number two, it just had an amazing earnings report that single-handedly resurrected the stock from 3 quarters of doing nothing. I think that's impressive. I think it has legs. It was sitting at a major resistance zone, this 170. This is a logical level for sellers to have rang the register. But again, what do you think about this pullback? Do you think that this whole thing was a ruse and now it's going to go all the way back down? I highly doubt it. I think this pullback is a buying opportunity. I would love another red bar or two. I'd love this to come down to 154, 155, but it may not. And as long as I can sell a bull put spread far enough away, I think that this is worth a shot. All right, I think it's worth a shot. So, look, I would love to be down at 140 and sell a bull put down at 140, 135. Right now, that bull put's trading for about 40 cents. I want at least 50 cents. So if we get another down day, might be in the cards. And I have no problem betting this isn't going back down to 140 in the next month. Or if it does, trading around it and turning it to a profit. But for now, based off today's prices, you got to go 145 as your short put. 140 is your long put. And I'm still comfortable with that one. I still think that's a decent spot to be in. The credit's going to be a little higher than 50 cents because it's making me go a touch closer. It's an 18 delta. So I'm selling that. I'm buying the 140. I'm getting a 70-cent credit, which if I really had my choice, I'd have Qualcomm get punched in the face one more day, like I said, and I'd get the 140, which may happen. But for now, I like the 145, 140 bull put, 70-cent credit on one of the strongest stocks with one of the best earnings announcement of this earnings season, which you can thank Qualcomm for part of that semiconductor rally. I mean, the market just went bananas after this. So that's my wild card pick. Em, what do you say?
That earnings gap, obviously, throws those moving averages way off, right? They're all trying to just play catch up. So when I do a bull put spread, I definitely want to be below those moving average. However, I can make the argument that, the price of the stock is so far away from, from those moving averages that if it were to come down, it would have to break obviously the 9. And then it would have to, break all those levels of resistance that it had been trying to push through that it didn't even get to, because once it had earnings, it just blew right through that. So I like it. It's enough distance for me that I don't have to worry much about it. Like you said, I would really prefer to have another down day so that I can even go lower, and maybe sell the 140 by the, by the 135. Rather than the 145, 140, right? So if we could get another down day, that would make it even better for me. But for 70 cents, not too shabby. And it's a $5 wide spread. So yeah, that's a pretty good ROI. That is
what I'm hoping. And look, I would like another down day, but as well as I do, like at some point you just have to ask yourself, I don't know, like how anxious are you to get in? Do you want it or not? Like, and you could pass on it and say, look, if you don't come to me, like I'm not desperate. Okay. I'll go find somebody else to hang out with. I want you to come to the spot I want.
I'm not calling you. Call me. I'm not going, I'm not going out on a date with you.
You know where I am, dude. You want to hang? Come here.
You gotta find me.
Stuff to do.
I'll be at 140 waiting for you.
That's right. And I don't know. I mean, you could put in limit orders and say 50-cent limit credit. If you can get there, I'm there. And I don't even mind that, quite honestly. But, we tend to just analyze it and see what it looks like when it gets there. But by the way, you skunked me round 2.
I did?
Oh, yeah. 74% to 25%.
Oh, they love me. They really love me.
Oh, my gosh. You're going to win now. You're going to win now. They're not going to pick a smug me over you. Go. All right. Well, you guys are voting. Feel free. Wildcard round. Qualcomm was mine, and then CNC. Qualcomm versus CNC here. I don't know, Em. You got any questions? Anything you want to talk about while they're voting?
No, I'm just anxious. I just want to see what those
I feel like I don't know. Maybe this is not a perfect reference.
Against you way too many times. I need a win before this year is over. You have not.
It's like Dumb and Dumber with you saw the 75 to 25 segment and you're like, oh, so you're saying there's a chance, right? I
didn't want to pull this, but I'm going to pull it now just because I know this is the third round. It's my birthday next Friday. For my birthday present, Team Town.
Next Friday is your birthday.
Next one. It's expiration Fridays. You want those contracts to expire worthless and keep all your cash flow next Friday? It's my birthday. I'm gonna make a wish for you guys. So vote for me today so that you can get your wish next Friday.
Coming in hot. Listen, I threw the birthday card down too. It's all's fair in love and war, right?
Fair. All is fair. Yep.
That's right. Okay. The other one was real quick. AMD was the other one I was thinking about. I would just like a third bar, right?
Yeah. And I totally missed AMD on this whole entire run up because, I don't even know. I just didn't even have it anywhere on my radar. I just totally missed the whole thing. So yeah, I want another shot at it.
I was trying to go, I would love to get down to 115. They won't let you. You have to go 120 right now to get a decent return. I just feel like, give me 115 and I'm totally interested. So AMD, you know where Emily and I stand. Okay, you want to play, then come hang out. But right now you're 11 cents away, buddy.
Yep.
I told my lab today, I said my bigger fear right now is not that the market will go lower, it's that it will gap up and go higher tomorrow.
And then it's just gonna.
I say that knowing, look, I'm gonna make money if it goes up. I just want stuff. Like from a trading perspective, it's gonna be.
Yeah, I need those setups to go in really well. So don't mess up my and this is what, like, this is what drives us crazy as traders, right? When we have time to actually go there and scan the markets and find good setups, and you're just waiting and waiting and waiting. The market taps and nothing gets filled, and you're just like, And then when you don't have time, it's when you miss everything. It's like, can I just get a week where I just get rewarded for doing the work? Like, I've put in the time this week.
Yep.
Give me.
Well, and I feel bad when you first start and it took you 30 minutes to put that order in. And then the stock gaps and it's like, hey, I spent 30 minutes putting this crap in.
I put my position sizing. I did all this. And you gap up on me.
Yeah, look, the market's mean. It's mean. Do you know who else is?
You know
what it was? You played the birthday card too late. I bet if you'd have played it earlier, it would have happened. Listen, I squeaked by with Qualcomm.
Yeah.
Live to fight another day.
Got me on the semiconductors. Everybody.
But listen, we're all winners here, Emily. I'm just happy you were gracious enough to join us and hang out.
It's always fun to come out and hang out with you on a Wednesday night. Team Tackle is the best. We have fun with this stuff, but I'm still coming for you. I'll be back.
Listen, one of these days, I'll get it, and I'll happily, give up my crown and everything. In fact, we should have a dopey. We should all have a dopey crown that we can wear during these. I think that would be quite entertaining.
I am used to losing, so I will wait for the victory day to come. So I can take a couple more L's before I come for you. So I am I'm good with that. But
I know. Listen, when Greg pounces me, sometimes I'm like, dude, I'll be back in a month. Okay, I'm not coming back next week. I'm gonna go find some more friends first.
If Greg was here tonight, this would be an easy win for me. I've knocked out Greg, so many times. Whenever I'm like, it's Greg on, I don't want to go. I want to go against Tyler. I want to go against.
Listen, this was super fun, and you're always a great contender. So, and happy birthday next week. You turn in 35, right?
Sure. Yeah. 35.
35 sounds good to me. Happy 35th to Emily. Everybody else, thanks for hanging out. We will be back next week where I will hopefully beat the crap out of Greg Holmes. What's funny is Greg's probably twice the size as me and he would kill me. Let's be honest. But I don't know who's next, but it will be a good fight. And we'll bring some good analysis to you guys. So thanks for hanging with us.